This is going to be a homework walkthrough for chapter 3-1. And normally I show you an Excel document that I have created, which in this case I have, but I kind of want to walk you through how to enter this into the McGraw-Hill book, because this is the first time you've probably come across how to enter things into a general journal. And so this first problem, the Polaris company uses a job order costing system. The following transactions occurred in October. And then it goes through a raw materials purchased on account for $209,000. B, raw materials are used in production. It gives me a total and then tells me how much is direct and how much is indirect. Accrued direct labor costs of $48,000 and indirect costs of $20,000. So obviously then we're going to have to add those two together to get the total cost. Depreciation was recorded for the factory equipment. Other manufacturing overhead costs are incurred or accrued in October. F, the company applies manufacturing overhead costs to production using a predetermined overhead rate of $6 per machine hour. I need to check. What letter was that? A total of 76,500 machine hours were used in October. I just had to make sure that I had this semester's number of $6. And apparently it was the same. Jobs costing $511,000 according to their job cost sheets were completed during October and transferred to finished goods. Jobs that cost $447,000 to complete according to their job cost sheet were shipped to customers during the month. These jobs were sold on account at 34% above cost. So that's going to be our markup when we get there. So the very first thing required, we've got to put in all the journal entries to record these transactions given above. So I'm just going to scroll down here. So this is my journal entry worksheet. And for each of these, A, B, C, D, E, F, G, H, and all that, we're going to enter one transaction at a time, which generally requires 2 entries or sometimes 3 entries into the general journal. Make sure you're entering your debits first and then your credits. I'll show you that as we go along. So this first one, raw materials are purchased on account. So that means raw materials of $209,000 is going to go into raw materials account. And you notice I just start typing it in and it gives me this drop down menu and I click on that and it fills it in for me. So 209,000. So if I bought raw materials on account, that means now I owe somebody money and that goes into accounts payable, because accounts payable is for when I owe someone else money. So now watch when I enter this credit, it indents the accounts payable just like it's supposed to be in the general journal. So debits first, credits second. Purchasing materials on account only requires raw materials and accounts payable. Okay, required to record the raw materials issued to production of 189,000. 151,200 were direct materials and 37,800 were indirect materials. So remember, when things are issued to production, that goes into work in process. We've got to have these direct materials to work on, so that's our direct materials. So that was the 151,200 that's in parentheses right here, see? So it's not the total, it's just the direct, goes into work in process, because the indirect always goes into manufacturing overhead. So my indirect was 37,800. my 151,200, 37,800. So then if I'm taking raw materials out and issuing it to production, then the credit is going to be raw materials because it's coming out of raw materials. And raw materials is a normal debit balance. So to take it out, it has to be credited. And so the amount that I'm going to do is just going to be these two numbers added together for the total, which they actually gave me. So just sometimes they don't give you the total. So you just add the direct and the indirect together to get the total. 189,000. Okay. So that's everything for required 2. 3, record the entry for accrued direct labor costs incurred of 48,000 and indirect labor costs incurred of 20,000. So again, this has got a direct part and an indirect part, and they didn't give me the total this time. So we'll figure that out. So again, direct labor goes into work in process. And that was 48,000. Indirect labor, same as indirect materials, it goes into manufacturing overhead. That's where all the indirect things go. And that was 20,000. So what's our credit? We have a labor cost. So we owe somebody for labor. So that would probably be salaries and wages payable, right? That's when we owe somebody for the work they did for us. And the total is going to be 68,000. And again, I got that number by adding the direct and the indirect together. Okay, that's everything for 3. 4, D. Depreciation is recorded on the factory equipment of 106,000. So depreciation, that's indirect cost, right? We can't assign that to any one unit that we produce. So that's going to go into manufacturing overhead, 106,000. And then it's going to be kept as a credit in the contra account accumulated depreciation, 106,000. So again, debits first, credit second, and we make sure that it all balances. Okay. Required 5. Other manufacturing overhead costs accrued during October of 131,000. Well, this one's not super clear. Part of it is obviously it's going to go into manufacturing overhead because it's just the miscellaneous costs that we don't have a label for. So manufacturing overhead, 131,000. Now, other manufacturing overhead costs accrued. So that sounds like I owe somebody money, and the only place other than salaries and wages payable where I owe someone money is accounts payable. So the credit is going to be accounts payable of 131,000. And the reason we can assume that is because we didn't pay cash for it, so it had to have gone on account. Okay. 6. The company applies manufacturing overhead costs to production on the basis of $6 per machine hour. A total of 76,500 machine hours were recorded for October. All right, so applied manufacturing overhead costs, that is going to go into work in process, right? And let's just, and then to get the total, that'll be $6 times the machine hours. So whatever your numbers are, multiply those two numbers to get the amount that you should put in. So I get 459,000. Okay, what's my other account? So this is manufacturing overhead as a credit. That's the other part of this. 49. Okay. G, where's number 7? Jobs costing 511,000 according to their job cost sheets were completed during October and transferred to finished goods. So they're going to come out of work in process and go into finished goods. Finished goods is a normal debit balance, so that's going to be my debit. Okay, and then it's going to come out of work in process as a credit. So again, it's that thought process of these T accounts where things go in and things go out, and how do they flow from one account to the next as we complete the manufacturing process. Okay, I believe that's everything for that one. Record the cost of goods sold. Let me just check. And then we record the sell-in account. So do these one at a time, even though they're both for letter H. So first, we're going to record the cost of goods sold. So an amount is going to go into cost of goods sold. Ah, so if I scroll up here in H, yeah, that was tricky. Normally they put all the information right there and I was counting on it, but they didn't. So right up here in H, it tells me the jobs had a cost of 447,000 to complete according to their job cost sheets, and they were shipped to customers during the month. These jobs were sold on account at a 34% above cost. So that's my markup. So the first part, recording the cost of goods sold, that's the 447,000. And the other part of that is going into finished goods. Okay. Now record the sale on account. So right here, calculator out. So right here, they told me this was the cost, and I'm going to sell it at this much plus 34%. So I'm going to take 447,000 times. So if I just times it by 34%, that just gives me the markup. So I want to know what's my total sales. And so it's going to be 1 plus the percent. So I'm going to put 1.34 because my percent was 34%. So 1 plus the percent times the cost of the job equals, I didn't put enough. I didn't put enough zeros. Let's try that again. 4, 4, 7, 1, 2, 3. There we go. 447,000 times 1.34 equals 598,980. So that's my number I'm going to be dealing with. Type that down before I forget it. Okay. So if I'm selling things on account, that means somebody owes me money, and so I need a debit accounts receivable. And then the credit, when I sell something, whoops, is sales. Okay. So finally, required one, all 9 parts of it are done. Required 2. Okay. So this one's going to require going back and forth a little bit between required 1 and required 2, because what we're going to do is now we're preparing the T accounts for just manufacturing overhead and work in process. And I'm going to take note really quick in part 2 right here. It says to prepare T accounts for manufacturing overhead and work in process. Post the relevant transactions from above to each account. Compute the ending balance in each account, assuming that work in process has a beginning balance of 37,000. So right now, before I forget, I'm going to put 37,000 as the beginning balance in work in process. Okay. So now I'm going to take these one at a time. I'm going to go down the transaction list and pick out the ones that I did for manufacturing overhead. The debits will be entered over here and the credits will be entered over here. Same with work in process. Debits are over here, credits over here. I'm going to go find the first manufacturing overhead and show you how to do this. So required 1, I'm looking for manufacturing overhead right there. So 37,800, and this is entry B. So right here, I'm going to pick B because that's the one it was, and then it was 37,800, and it was a debit. So transaction letter goes here, debits go here. If it's a credit, then the transaction letter goes over here, and the number goes here. Okay, the next one, that was B, and I'm looking for manufacturing overhead. C, 20,000 debit. So I pick C, 20,000 for debit. Okay, I'm still just looking for manufacturing overhead. So manufacturing overhead debit of 106,000. That was D. Okay. And then manufacturing overhead in E of 131,000 debit. So scroll down to find E. And that was 131,000. Okay, we were on E. Okay, F. Now this time it's a credit. Let's entry F, credit. So I want to put the F over here, right? Because it's a credit. It came out of manufacturing overhead. Now, again, we're only dealing with the T accounts for manufacturing overhead and work in process. Obviously, all of those journal entries are connected to T accounts, but these are the only 2 they want us to do. Okay, so now I'm going to do it again, only this time I'm looking for work in process, and I've remembered to put in the beginning balance that they told me about. Okay, work in process. So B, work in process, 151, 200 debit. B, okay. C, work in process, 48,000 debit. Whoops, that's not what I wanted to do. C, 48,000 debit. Okay, we're looking for work in process. Now we have F is our next one, 459,000 debit. Okay. And then our last work in process is G, credit of 511,000. So I'm going to put it over here. That's the credit. So be super careful entering in all of your numbers. And so that's what the worksheet will look like. Make sure I have debits and credits in all of them, and they all match, they balance amongst the entry. If you need to go back, you can go back to the transaction list, or you can do the journal entry worksheet if you need to make any edits. Okay, moment of truth, check my work. Yay, answer is complete and correct. Okay, I am now going to switch over to my normal Excel spreadsheet because I'm not going to take the time to do everything I just did on that one. I just did it that way to show you how to enter these problems into McGraw-Hill and get it right. Okay, Dillon Products manufactures various machine parts to customer specifications. The company uses a job order costing system and applies overhead costs to jobs on the basis of machine hours. Okay, so there's my allocation base. At the beginning of the year, the company used a cost formula to estimate that it would incur 4,245,000 in manufacturing overhead costs. Okay, so that's my estimated manufacturing overhead cost. Remember that from before? So I'm going to type that down here because that's going to be important later. There's my estimated at an activity level of 566,000 machine hours. Okay, so now I'm not going to lose those numbers. So if you remember from previously, now I have the information to figure out my um, predetermined overhead rate, and that's just simply the estimated manufacturing overhead cost divided by the estimated hours. So that gives me a predetermined overhead rate for this company for $7.50. You can make that calculation later, but for me, I didn't want to lose those numbers because it's easy to lose those numbers. The company spent the entire month of January working on a large order for 12,500 custom-made machine parts. The company had no work in process at the beginning of January. That just means there's no beginning balance. Cost data relating to January follow. Okay, so, and again, this is going to be input just the same way as question one, but this is how I set up my Excel spreadsheet so that it will just go faster. So raw materials purchased on account, that's going to be a debit to raw materials for 311,000. And they're on account, so it's going to be a credit to accounts payable for 311,000. All right, the raw materials used in production is 266,000. So that's my total. So that's my raw materials total that was used. So that's going to be my credit. Now, my direct materials is 80% of that. So because I'm in Excel, I'm going to take equals this times 0.8 for 80%. And then my indirect, I could either take this number and subtract this number to get manufacturing overhead indirect raw materials, or I can multiply. So I'm going to multiply again because they told me 20% equals this times 0.2. And if I want to check my work, I can go over here and go equals sum and add those two numbers together. and I get that same total that they gave me right there. Okay, C. Labor costs accrued in the factory of 150,000. So that's my total salaries and wages payable credit. Now this one is tricky because it says 1/3 direct labor and 2/3 indirect labor. So the first time I did this problem, I multiplied 150,000 times 1/3 or 0.33. Okay, I can guarantee you that's the wrong number. And it's wrong by $500,000. So the way they worded this, the only way my brain could figure out how to do it is I'm going to divide this 150,000 total into three parts. So I'm going to divide it by 3 to get 1/3. So my direct labor is work in process. So equals 150,000 divided by 3 to get it into three parts. So that will give me 1/3. So it's 50,000. See, if I multiply this by 0.33, I get the wrong number. So if I do my total minus my direct labor equals 100,000 of indirect labor. Hopefully that made sense. If not, shoot me an email and I can explain it more fully. Okay, D. Depreciation recorded on factory equipment of 63,400. So again, that's manufacturing overhead because it's an indirect cost. And then it goes credit to accumulated depreciation of the same number. All right, E. Other manufacturing overhead costs incurred on account. So this time they actually told you it was on account. So manufacturing overhead of 84,100, and it's on account, so it's account payable credit. Whoops. So be really careful when you're typing your numbers in or copy and paste so you don't get errors because of typos. Okay, now I forgot to erase that, but I already typed that in. Manufacturing overhead cost was applied to production on the basis of 40,940 machine hours actually worked during the month. So here's my actual hours. So I typed it in right here, 40,940. Because my work in process and my manufacturing overhead is going to be based on this. And this is where that predetermined overhead rate comes in, right? Because it's based on machine hours. So if you'll recall, that 4,245,000 was up in the very first paragraph as our estimated manufacturing overhead cost, and our estimated machine hours of 566,000 was also in that first paragraph. And you take the manufacturing overhead cost divided by the estimated, and these are both estimated, divided by the estimated machine hours equals that predetermined overhead rate. Now, for F, I can take the number of hours they told me were actual times the predetermined overhead rate. And then it's the same number into or out of manufacturing overhead. So work in process, manufacturing overhead. Okay. This last part, that's required 3, so we're going to skip that for now because now we need to do the T account. And it's the same thing. Manufacturing overhead, only this time, let's see. Prepare T accounts for manufacturing overhead and work in process. Post the relevant items from your journal entries to these T accounts. They gave us no beginning balance for either one of them. So there's no beginning balance. And then you're just going to go up back and forth and find all of the debits to manufacturing overhead and all of the credits and enter those in just like I showed you previously. The same with work in process, but just go down to F, right? Because it says in number 1, as we're preparing that, A through F, and for right now, we're ignoring G just for a moment. Okay, so I'm not going to go through each one of those. That's something you guys can figure out. I have the highest faith in you. So we're going to go back to prepare the journal entry for item G above. So what does G say? The completed job for 12,500 custom-made machine parts was moved into finished goods warehouse on January 31st to await delivery to the customer. So I have 12,500 machine parts that were moved to finished goods, right? Okay, and that was everything we were working on that month, right? That was what they told us right here. The entire month of January was working on those 12,500 and there was no beginning balance. So the amount for that 12,500, so you can either add it from the work in process entries that are debits up here, or if you look at part required 2, there's a balance right here. So it's your direct labor, your direct materials, and your manufacturing overhead applied, right? Yes. So those 3 numbers added together give you the number to use for required G. So finished goods debit, right? Because we're moving it into finished goods. And then a work in process credit because it's coming out of work in process because it got finished. So it's going in out of work in process and into finished goods. Remember, debits go first, credits go second. Okay, let's read required for. Okay, so for my problem, of those 12,500 parts that were finished, 10,400 of the custom-made machine parts are shipped to customers in February. How much of this job's cost will be included in the cost of goods sold for February? So the first thing we're going to have to figure out is what percent of these finished parts got shipped. So I should have deleted those. Okay. Whoops. Okay. So the parts shipped in February for me was 10,400. So what percent of the 12,500 is this 10,400? Now remember, anytime you're doing a percent, you divide the is by the of. What percent is 10,400 of 12,500? Is divided by of. So the part divided by the whole. So I have 83%. So that is still not the answer. They want to know what amount of this cost of goods sold, right? This number here, what amount of that will be applied in February? So we're going to equal that ending balance of work in process times the percent. And that's how much will be applied in February as cost of goods sold. Okay, question 3 is a doozy, but we're gonna do it. Okay, Selected T accounts of more company are given below for the just completed year. So we're at the end of the year and they're giving us all this information with some glaring spots where they did not give us numbers. They just gave us question marks. So they want us to calculate out what is the cost of raw materials in production, how much of the materials above consist of indirect materials, how much of the factory labor cost for the year consists of indirect labor, what is the cost of goods manufactured for the year, what is the unadjusted cost of goods sold for the year. Do not include any underapplied or overapplied overhead in your answer. If the overhead is applied to production on the basis of direct labor costs, what predetermined overhead rate was in effect during the year? Was manufacturing overhead underapplied or overapplied, and how much? Compute the ending balance in work in process. Assume that this balance consists entirely of goods started during the year. And if 8,250 of this balance is direct labor costs, how much of it is direct materials costs and applied overhead costs? So don't worry. We're going to take this a piece at a time and you're going to be able to figure it out. So first thing I did was I took all of those T accounts and made myself a little chart with the question marks so that I could see all of the numbers and be able to make Excel do my math. So the first question is they want to know what was the cost of raw materials used in production during the year. So that is going to be this credit. So how do we figure out this credit with the information they gave us? Well, we know that the debits minus the credit equals the ending balance, right? So we can reverse that a little bit. And if we take and equals the beginning balance plus the purchases minus the ending balance, I hope this is sounding familiar. This was a formula in your book that tells us the ending or the credits for raw materials. So we took that formula from your book and we just used the information they gave us and worked backwards until we got the answer they were looking for. And so that cost of raw materials is required one. Okay. How much of the materials in required one above consisted of indirect materials? That is an excellent question. So we're going to take the required one. That's our total raw materials, right? So we're going to take our total raw materials and we're going to subtract the direct materials in work in process, right? It's labeled, they gave us that number. So that's the answer to. So 3, how much of the factory labor cost for the year consisted of indirect labors? Okay, so it's very apparent where the direct labor is. And we know direct labor plus indirect labor should equal total labor cost. So where's our total labor cost? Well, that's going to be right over here in factory wages payable. Our total labor cost for the year is the credit. So that's our total labor cost. If we take total labor minus direct labor, then what's left over is our indirect labor, which is what was required 3. Okay, required 4. What is the cost of the goods manufactured for the year? So let's see. So we know that when something is a credit in work in process, it credits work in process, and then it debits finished goods. So this question mark equals that number right there. So now I can figure out what the credits of finished goods are, which that is, what was the cost of goods manufactured for the year, right? If it's finished, then that cost will be right there. So it'll be the credit from finished goods. No, I lied. It's the number we just figured out. It's that debit. So work in process, the finish. So that was the cost of the goods manufactured for the year, because once they hit finished goods, that means they've been manufactured that year. Okay, so 4 is that number we just figured out right there. Okay, now we can get to this one. So I typed it out over here because it's one of those, it's a process. So we have beginning finished goods, and then we're going to add the cost of goods manufactured, which that's the answer to number 4, right? That equals the goods available for sale. I'm just going to add those two numbers. And then I need to subtract the finished goods ending balance, which they gave me. So I'm going to take equals 514,000 minus 61,500, and that equals my unadjusted cost of goods sold. So it also belongs up here. Okay. Now 6 is a little tricky because it's worded weird, but I'll help you through it. If overhead is applied to production on the basis of direct labor cost, what predetermined overhead rate was in effect during the year? So this is going to be a percent of direct labor cost. So we have the first number we need is the manufacturing overhead applied, which would be the debit to work in process. And then we're going to divide it by the direct labor cost, which is also in work in process. Okay, so I'm going to take equals manufacturing overhead applied divided by direct labor cost, and it's going to equal 160%. So make sure you don't move your decimals to the wrong place or forget to move your decimal, because they want it in a complete percent, not in a decimal form. So for my answer, it's 160%. Okay. Now, actual overhead cost. That's going to be the debit to manufacturing overhead. And applied, that was in work in process, right? Manufacturing overhead. So did I over apply or under apply? So this is what I applied. This is how much at the beginning of the year I thought was going to be. And this is how much it actually was. So I over applied it by $11,000. So again, this is what I thought was going to happen, and this is what actually happened. So this is what I put on the books at the beginning of the year, or the beginning of the job, or however you want to look at it. But this is what I put in. but this is what's actually happened. And so I over applied it by $11,000. Okay. Required 8. Compute the ending balance in work in process. Assume that this balance consists entirely of goods started during the year. Okay, no beginning balance. If 10,250 of this balance is direct labor cost, okay, so they gave me this right here. How much of it is direct materials cost and applied overhead cost? So we're going to have to work kind of backwards. Let's see. So first we need to know what's ending work in process. So we have our debits and we have our credits. So we just simply need to equal sum my debits, close parentheses, minus my credits. So that gives me an ending balance of 36,800. So equals 36,800. And I'm going to subtract that 10,250 that they told me in 8. So equals this minus this. That's not right. Ignore everything I just said right there. Okay. Manufacturing overhead cost is the direct labor hours times the predetermined overhead percentage rate of direct labor hours. So those numbers are right here in front of me. They gave me the direct labor, that shouldn't say hours, that should say cost. We're just dealing in dollars right now. Sorry about that. Okay, so we're going to take that direct labor cost that they told us in 8 and multiply it by that percent we got in required 6, so 160%. So my manufacturing overhead cost is still wrong. What did I do wrong? Oh, that's what I did wrong. Oh, I have information from last semester right here. Sorry. Okay, let's fix that. Okay. That is not my number right there. You guys should fire me. Okay. So right up here, I took a screenshot of this year's problem. $8,250 is the number I need. So $8,250 now it's worth. Okay. So direct materials equals the end in work in process minus direct labor minus manufacturing overhead costs equals the direct material cost. Okay, so let's figure out where these belong over here. So in required 8, the first is the ending work in process that we figured out. Direct materials cost is that last number we figured out. And that's why I went through the whole problem before I filled this in, because I knew the second answer they wanted was we couldn't get that answer until we got this middle answer, manufacturing overhead. So this one goes there. That's the third one. So that's why I went through that whole thing. See, we did it. Good luck.